What is good, guys? It's Jesse in Las Vegas. Amazing video today as we break down all the fundamentals that halted this so-called altcoin season right in its tracks. In the near-term horizon, there are other major macroeconomic events that are set to increase the selling pressure on altcoins. First, we've got to unpack exactly what was behind this move, starting with a flashback from 10 days ago. The next big event, April 30th, it's PCE, it's inflation. Just like we showed on all the other charts, there'll be risk off before that. Here's the thing. Instead of it bouncing to the upside like it has previously, there's a great chance based on Powell's speech that it then drops off like a cliff into the June 18th quarterly economic report. That video was posted 10 days ago, accurately calling the altcoin rally peak using monetary policy macro data. Zooming in on the total 3 chart to see exactly how the central banks are always in control of cryptocurrency right here on May 15th. That's when Powell came out with his speech about inflation. The central banks have a dual mandate. One, they have to make sure that there's plenty of jobs in America. And two, they have to make sure that the inflation target is 2%. About 4 years ago, because of all the money printing they did at lockdown, causing that amazing bull run last cycle, the Fed decided that they were going to change their inflation policy and take an average over a 10-year spread. On May 15th, Powell decided they're going to walk that back. For cryptocurrency, this is adding massive risk-off behavior, creating selling pressure. Here's how it all boils down in a nutshell. Going back to Friday, May 30th, Thursday night, everybody in the market knows the PCE is going to get released 1 hour before the stock market opens. So institutional investors start de-risking. Once the print hits, there's even more selling pressure because the year-over-year inflation is at 2.5%. In the event the Fed goes through with no more averaging inflation, we must have a strict 2%. To do any monetary easing, this will halt rate cuts, like in September and November, that caused this massive upside, and this will halt quantitative easing. For Kaspa, this is a dream come true. Right now, the devs are testing smart contracts, and they need more time to build dApps on chain. Thus, when the quantitative easing finally starts, Kaspa will be fully developed, ready to get maximum upside on that move. We can see right on the Kaspa chart, that's May 15th. As soon as Powell started talking about inflation policy, it started creating massive downside pressure. Here's another point from a VIP post regarding Kaspa. Every single FOMC meeting, Kaspa's price has been somewhere between 10 and 12 cents. The only exceptions being the Bank of Japan carry trade and the 2 FOMC meetings surrounding it on either side. Therefore, looking forward to this very important quarterly economic report during the June 18th FOMC meeting, exactly like we saw right before the PCE data was selling pressure beforehand, there is likely to be massive de-risking because this quarterly economic report can carry both a new updated official inflation policy like Powell started talking about on May 15th, as well as an update in rate cuts, meaning we're not going to get any rate cuts or maybe just one in 2025. The last quarterly update, they had projected 2. So once new information is realized, it must be averaged into the market price. Last week on social media, every trader was calling for altcoin season. Once you understand central bank monetary policy, it becomes crystal clear. There was a 0% chance altcoin season would take place within the next 45, even 90 days. Shout out to Crypto John of all people, a trader that we had previously singled out picking on the trading mistakes he could have avoided had he had a deeper understanding in central bank policy. John has improved his game drastically through the study of FOMC monetary policy. This is, of course, one of the highlights of our VIP course starting on May 15th with this inflation policy change. All we did for the next 7 days was post bearish fundamental concepts, connecting to central bank policy, connecting to technical analysis, so everybody could fully understand the risk of downside pressure on the horizon. Previously, on the December 20th peak, we had mentioned that there was a top forming, but we didn't drive it home with enough strength so group members would really learn from it. This time, we've definitely improved our coaching, and the program is getting stronger and stronger each day. Jumping back into Kaspa's price action, is this 8.5 cents a good range to buy? Absolutely. Is there macroeconomic data showing that there can be continued selling pressure and even more value discounts in the near future? Without a doubt. Not only is that important quarterly economic update, plus Powell's new catalyst that he's been building up since May 15th to make that inflation policy official, there's the jobs report as well, which is known to create selling pressure. Therefore, there's a high possibility that we're going to form a triple bottom. Of all the classic patterns recorded, the triple bottom has the highest price performance with an average upside of 10x. Keep in mind that the third touchback on the triple bottom is often slightly elevated than the prior two. This fits directly with the on-chain data. Right now, they're testing smart contracts and broader macroeconomics. Soon, the Fed will be able to bring down inflation to that 2% target and then start quantitative easing, ripping Kaspa to the upside. Jumping over to the total 3 chart, this is for your side bags. All the other altcoins out there from SUI all the way down the listing. This is starting to turn out to a head and shoulder pattern without a doubt. In order to get upside, almost 100% of the time, the Fed will have a macro calendar date that changes market sentiment. On April 9th, finally the sell-off was over and everything went to the upside. Do you know what FOMC data took place then? They printed the FOMC minutes. This is an official document highlighting the prior FOMC meeting. In that document, making the meeting's news official, they decided that they were going to slow down and reduce quantitative tightening. Now, instead of whacking 65 billion out of circulation, they're only doing 25. This creates more liquidity for altcoins. Thus, we started to get some upside rally. Now, there were many events that targeted AI as the leading sector in this rally to the upside, and it could have gone either way depending on what type of data printed what type of numbers. It's the understanding of this process that's the next step in becoming your best trader. The study of macroeconomic data has been going on for almost a decade myself, and there's still so much more to learn. So never believe for an instant that you've got everything figured out. Our VIP group is a great spot to advance your learning curve because there's a lot to soak in. And right now, we still have minimal time to do it. This is all going to translate into value once we signal the market peak of this 2025 rally, as well as search for clues into when this sell-off will be completed. Over the next few days and week, we're going to be doing multiple altcoin videos targeting creators who have been hyping up this failed altcoin season. In social media, one of the biggest issues is creators aren't held accountable for the mistakes and misdirection they feed everyone as alpha. Now's your chance at home to start to fight back by thumbs upping this video, subscribing, and make sure to share this week's content all around social media. Therefore, the creators that are calling it wrong are held accountable. Meanwhile, the traders that are offering valuable information that can help you on your journey to become a better investor are raising up in the subscriber count. Thanks for checking out this video, guys. We'll catch you on the next one.